Hey guys, welcome back to the channel. In today's video, I want to talk about the basics of doing your taxes. This is something that everyone has to do every year. However, I feel like most people don't understand the basics. This is something they don't teach you in high school or in college, and this is something that I personally had to figure out on my own. But I'm alarmed by the fact that a lot of people I know my age or younger don't do their own taxes. They say my parents do it for me, or my parents know a guy and he just prepares it for everyone in the family. For me, I don't find this acceptable. You should be financially literate and have complete control over all your finances at all times. And doing your taxes annually is something, it's the bare basics. It's very important. Today we're going to go through the example of my basic taxes because my taxes aren't that complicated. And hopefully this can give you a broader understanding of what your tax situation looks like. Here's probably the 8 most common taxes that you know about and hear about. The first 4 are payroll deduction taxes. You have Social Security, which is it's a flat rate 6.2%. Medicare, which is a flat rate 1.45%. State income tax obviously varies to every state. You might live in a state that doesn't have state income tax. And then federal income tax, and that's what we're going to talk about in today's video. Beyond that, there's capital gains tax, which can be between 0 and 20%. Property taxes, depends if you own a home and where you live. Local sales tax, some states don't have sales tax. I looked up the highest state with a sales tax, and it's Tennessee at 9.47, which is quite ridiculous. And then local taxes, which can be levied for any reason, and they are pretty much everywhere. Personally, I'm in the military, and if you're also in the military, you will understand what you're looking at. However, if you're not in the military, don't worry about it. You can still follow along this example, but I'm going to use some military terms for you, and just know that your situation is slightly different, of course. This is my DFAS statement, my end of year earnings. This is my paycheck for December of 2018. I'm a first lieutenant, and my year-to-date entitlements was almost $65,000. However, that's counting the housing allowance and the food allowance, which is not taxable. You don't pay taxes on your BAS or BAH. So my base pay, what was that? And my base pay was almost $45,000. For federal taxes in December, I had $391 taken out, Social Security $252, Medicare $59, state taxes $243, and then year to date, I had $4,397 withheld for federal tax. People do not understand how federal tax brackets work. When people say, oh, if so-and-so is elected, your tax rate will go up to 70%. That's not how that works when they talk about marginal tax rates. What percentage people who are top income earners pay on their highest income. There's a really good video by Vox that explains exactly how tax brackets work. I just want you to know that your income is taxed at different percentages for different amounts, and it's the same for everyone up to a certain amount. And we'll go through my numbers and I'll explain how this works. But first, you have to determine what is your taxable income. Your raw income is separate from your taxable income because you get deductions. The standard deduction as of last year was $12,000. In my opinion, that's pretty generous. However, a lot of people choose to itemize their deductions, and the most common itemized deductions are paying state taxes, donations to charities, interest on mortgage payments, maybe medical expenses. What you would do if you want to is you can itemize and try and figure out which of these two is larger. If your itemized deductions do not exceed $12,000, then the standard deduction is better for you. However, if you do have a lot of itemized deductions, then the standard deduction is not in your favor and you want to just go completely itemized. The standard deduction is nice because it's basically the federal government saying, hey, we know taxes are complicated and difficult. Don't worry about it. Just take this generous rounding error of $12,000 and then don't bother itemizing. However, a consequence of this is people like me don't bother to figure out what their itemized deductions are year to year. I don't bother thinking about it. I just always take the standard deduction every year, and most people my age or younger are probably taking the standard deduction every year. Of course, everyone's situation is different. If you own a home, if you make a lot of donations, if you're paying state income tax, potentially the itemized is a better option for you. So this is how this works. My gross income was $44,452. You then subtract the standard deduction of $12,000. So my taxable income is only $32,452. Now, of the first 5 tax brackets, I actually only go into the first 2. My taxable income from $0 to $952 is 10%, equaling $953. My next bracket is then between $9,525 to $32,452. That gets taxed at 12%. So I would then pay $2,751 on that. To confirm what I'm telling you is correct, you can Google 2018 taxable income chart, and it'll show you the taxable income for singled, marrieds filing separately, head of household, for every dollar amount that people earn. So it's a lot of pages showing every income amount earned. If we go to 32,450, it shows that the federal taxes I would owe is $3,701. According to my math, I got $3,704, so it just rounded down a little bit at each step in the process. I can then figure out what my federal tax rate is by just dividing how much I pay, $3,704, divided by my gross income, my base pay being in the military, $44,452. My federal tax rate is only 8.3%, and that's pretty good in my opinion. You can add in Social Security, which is 6.2, and Medicare, which is 1.45. Before state, my effective tax rate is 15.95%. And I personally am not going to complain about that amount. I think for everything that we get in our government and in our society, paying only 16% is quite fantastic. The next thing I want to talk about, though, is how much was being deducted every month and what was the year-end total. Total, I had $4,397 deducted. However, I only owe in federal tax $3,704. Subtract those two amounts and you get a tax return of $693. I feel like tax returns are really misunderstood by people. Tax returns are not money that you're magically getting back. It's you overpaid the federal government. And the federal government does this on purpose. They want everyone overpaying every year so that once a year you get money back and then you feel happy and you're excited. However, that was an interest-free loan that you paid to the government. If I had too much money taken out in my January 2018 check, I don't see that money get returned to me until March or April of 2019. That's potentially a 17 month interest-free loan that I gave to the federal government. Once I understood this, I actually went on myPay and I changed my deduction amount. You can increase the amount of deductions that you're claiming or you will claim, and it'll lower how much gets taken out of your check every month. And I increased it to 10. I basically told myPay that I have 10 dependents in my household and that I'm not going to pay any federal taxes. So the amount of federal taxes being withheld from my check now every month this year is only like less than $100. Now what's going to happen is at the end of the year, I'm going to owe the federal government maybe $6,000 or $7,000 because my base pay went up. But I'm just going to pay that out of pocket. I'm currently putting money in a savings account that earns 2%. I would rather the money just sit there for 16 months earning 2% and then I just pay the government my bill. So a takeaway from this video I want you to know is that if you're overpaying and you don't want to, find a way to change that and then just budget for how much you know that you will owe the federal government come tax time. For fun, let's do another example, and this is the military base pay table. We're going to do what do the federal taxes look like for an 06 colonel with 20 years making $10,563 a month. So this colonel's yearly income is $126,700. First, let's presume that they're single, not married, they don't have any crazy tax situation, and they're going to take the standard deduction of $12,000. That gets their taxable income down to $114,756. And just like my personal example, you start filling up these different brackets, and that's how much that money is taxed at that rate. So for this colonel's income up to the first $9,525, they're taxed at 10%, just like you would be, just like I would be. Then from $9,000 to $38,000, it's at 12%. From $38,000 to $82,000, it's at 22%. And then up to that final 114, it's at 24%. You add up all those numbers and you'll get a federal tax owed of $21,831. You can check the table, it's the same amount. Divide what they're paying in taxes by their gross income, and they would be paying a 17.2 federal tax rate. Add in Social Security and Medicare, and before state taxes, they're paying a 24.9 effective tax rate. Okay guys, if you made it this far, I hope that you at least learned something about paying your taxes annually. Maybe you can plug in your own numbers and see how much you'll owe for federal taxes next year. If you found this video useful, give it a thumbs up so the algorithm will recommend it to other people. In addition, if I made a mistake or you have any questions, leave me a comment down below. I will respond to you. And if you're not already subscribed to the channel, consider subscribing. I post weekly about military and finance topics. And until the next time, take care, guys.